The Jamaican economy has been reaping tangible results thanks to government's continuation of the economic reform program.
The economic program is very much on track, but we could even be a little bolder and say that we are seeing it have effect on economic growth.
In its latest quarterly report, the Planning Institute of Jamaica said the economy grew by 1.5% for the July to September 2015 period, the highest since June 2014. The Executive Board of the International Monetary Fund also indicated that Jamaica passed its 10th consecutive IMF test, a review of the July to September period. An IMF release said the Jamaican authorities continued to have an impressive track record of strong program implementation under the extended fund facility. As a reward, the country received $39.3 million more from the multilateral agency in December, and the primary surplus target was reduced from 7.5% to 7.25% in this fiscal year and 7% in 2016-2017, paving the way for government to spend more money on capital projects like fixing roads and to protect the poor.
The country's economic prospects have looked and are looking brighter because of the efforts that have been made by everyone. The 11th review will be as successful as the previous 10 have been, and with much greater margins of success for Jamaica.
That's partly because the country's fiscal accounts are looking good. The primary balance at the end of October was $53.8 billion, $9.5 billion ahead of target. And the net international reserves at the end of November stood at $2.34 billion, $740 million ahead of target. Tax revenues at the end of October were $225.9 billion.
This is the second month that we have seen this phenomena where the revenues are better than budget and the tax collections are better than budget. And it must speak to greater tax compliance. In the same way that we are critical of the tax authorities when they are not collecting the tax, I think we should congratulate them for doing so.
Tax on interest, sales consumption tax, general consumption tax, and company tax were also ahead of target.
When I combine that company tax result with the stock exchange movement, the conclusion that I come away with is that companies generally are doing better this year than they did last year.
The Statistical Institute of Jamaica Statin has also indicated that inflation for November when compared to October was 0.5%. Inflation for December 2014 to November 2015 was 3.4%.
These inflation rates, I am told by the Bank of Jamaica, are the lowest in almost 50 years. And this is tremendous.
Bank of Jamaica has also reported that for the last 12 months ending September 2015, private sector credit increased by 7.8%.
The demand for credit in the private sector is growing faster than inflation, and that's a positive sign. It says that there is growing confidence, growing investment, renewal of capital, expansion of production.
Statin also reported that Jamaica's trade deficit fell by 11.5% in the first 8 months of the year. The trade deficit for the January to August 2015 period was roughly $2.5 billion, $326.9 million less than in 2014.
And we are headed towards a current account deficit of about 3%, which is really super for a country like Jamaica, and internationally would be considered to be world class.
And for Jamaica's debt to gross domestic product GDP ratio, what the country owes versus what it produces,
our debt has been reduced by 20%. We had a debt to GDP ratio in 2013 of 145% of GDP, which is now down to 126% of GDP and should have an out term of 120% GDP by the end of this fiscal year.
So the figures indicate that the Jamaican economy is heading in the right direction. The government, supported by the IMF, is sticking to the terms and conditions of the economic reform program, all in a bid to increase jobs, productivity, and economic growth.